Welcome to Prime Life. We call it Retirement 2.0. Leave each episode with tips and new ideas to help you navigate retirement in our new age. It's your time. Make it count.
This podcast is for educational purposes only. It is not intended as medical, investment, or financial advice. We do not sponsor or endorse any of the individuals, companies, products, or services featured on this podcast. Any statements or opinions expressed are of the individual who makes them. We hope you enjoy the episode.
Hi, and welcome to another episode of the Prime Live podcast. I'm Mary Crean, and I'm the host. And I have a very interesting guest today. His name is Rob Lourenco, and he is VP of Client Services at Deft Research. Rob, welcome to Prime Live podcast. Tell our audience a little bit about yourself and your journey in your career, but also tell us a little bit about Deft Research, what it is and what you are all up to these days.
Sounds good. Thank you so much, Mary, and thank you for having me. So I'm a VP here at Deft Research. Just a little bit about the firm for folks who may not be familiar with our work. So Deft Research is a market research firm that specializes in providing studies and custom research to the health insurance industry, right? So majority of our clients are health plans. We do also have as clients marketing agencies, FMOs, other adjacent vendors in the space, but health plans, Medicare Advantage, and MedSup plans are our clients. I've been with the firm for 3 years, a little over 3 years now. I've been in the Medicare space for I think 16 years. I got my start way back in the day in my 20s as, believe it or not, an insurance agent, right? I used to sell Medicare plans, Medicare Advantage, MedSup. Spent half of my career working for local carriers and the other half working at FMOs. Sort of found my way in leadership, overseeing teams for a number of years, and was a consumer of Deft's research, right? On that end of the, and now I find myself here serving the community, serving the industry, and helping some of my former colleagues who are still at it, right? Trying to provide these services to our consumers.
Well, I think it's great because there's so much information out there, especially as we approach AEP. So I love, again, that you are on at this point. And let's jump right into the questions. And Rob, One of the things you didn't know about me is I'm also a licensed agent as well. So it was interesting to hear you say that's a hat that you wore years ago.
Yeah, absolutely.
Yeah. So let's jump into the questions. So what trends are you seeing in Medicare Advantage plans in 2026?
Yeah, so the biggest theme I would say over the last year in the MA market has been all the disruption that we're seeing, right? So we saw it last AEP heading into 2025, right? For folks who are familiar or may not be as aware, 1.8 million MA consumers lost their MA plan for 2025. Which represents about 8.7% of the market, right? So almost a tenth of the market lost their coverage. And we're sort of, just a few days away here from the AEP for 2026. And the industry is bracing for more of that, right? And we've been hearing this from carriers from the start of the year. It's been a challenging few years for a lot of health plans. Their financials a little bit out of whack. A lot of plans have gone non-commissionable, right, as a result. And, you listen to the earnings calls of some of these national carriers, even earlier this year, they were saying, look, we need to focus on profitability, right? We're not profitable, right? So we heard Aetna announcing discontinuing plans for 2026, United announcing service area reductions and terminating plans. We've been keeping track of this here at Deft, right, throughout the year. Last time I checked, and I haven't looked at the public data, right, that just came out yesterday. I haven't seen that yet, but last I checked, by our counts, we were sort of waiting for 1.4 million consumers being impacted by MA terminations once again for 2026. So it's been a lot of disruption, and I think we're maybe rounding the corner, so to speak, with reimbursement rates improving for 2026. But there's been a lot of change and a lot of benefit degradation and a lot of turbulence, I would say, in the market.
Mm-hmm. I appreciate that, and we've heard the same. What would you say the same for Medicare supplement in 2026? What kind of trends are you seeing?
Yeah, so when we look at our shopping and switching study, at the same time that we were seeing Medicare Advantage switching spike, MedSup switching has stayed more or less similar to what we've seen, right? More or less stable. The MedSup space has had some challenges around affordability, right? One of the challenges, I mean, this is for all products, right? But one of the challenges post-COVID was we saw a spike in utilization, and it has not gone down, right? We're a few years now removed from COVID, and utilization is still high. It's high in MA, it's high in MedSup, and one of the things that's brought about in the MedSup space is premium increases, right? So affordability has been a big challenge. Last year, over half of MedSup consumers saw double-digit increases to their premiums. So the challenge on the MedSup side is our product is great, right? These benefits are great. How do we make it affordable for folks?
Let's switch gears a little bit about the Inflation Reduction Act and Medicare Part D. Can you explain a little bit about what that is and what that looks like in 2026?
Yeah, so the Inflation Reduction Act introduced a lot of measures, right, to deal with rising costs in the post-COVID world where everything was going up and up and up. And a lot of those provisions impacted the Medicare space. Now, some of those have to, ended up impacting Part D. There was measures and provisions around negotiating drug prices, which again geared towards benefiting the consumer, right, the end user, right. So with drug prices going up, the government steps in here to try to negotiate some of these prices. They did away with the donut hole, which is a major component of Part D. They introduced a cap to how much you can spend as a consumer, right? With the donut hole gone, now there's a $2,000 cap on how much folks can spend, beyond which they spend nothing, right? So all these things obviously beneficial to the consumer, and especially for those who have a high prescription burden. But the byproduct of that, of course, is higher costs for everyone, right? If you're going to, nothing, we were really facing the potential for huge premium increases for 2025 ahead of the AEP. Had CMS not stepped in last minute and introduced a Part D demonstration plan, almost made every carrier opt into it, and provided some relief there, we would have seen huge swings in premiums. Thankfully, it wasn't as pronounced for 2025. But higher costs, higher prescription deductibles. The average Medicare consumer saw their Part D deductible go up by $165 last year for 2025, which is substantial, right? I mean, you're really taking some of the expenses of the higher utilizers and you're spreading it. That's what you're doing. You're spreading it across the entire market.
Right.
But the other byproduct too is those folks who may have had maybe prescription needs that they didn't really tap into because of affordability are now saying, oh, great, now that I have this protection, I can go ahead and spend more and get some of the things that maybe have been prescribed and have been sort of slow to get, like GLP-1s, as I'm sure you've heard, has really hit the news this year. A lot of carriers have struggled. When talking about utilization, they've mentioned by name GLP-1s, the Ozempics, the Wegovy's. These are $500,000 prescriptions. If you were a senior a year or two ago and you had this prescription potentially that you could take and you looked at your expenses, you might have said, I can't afford this, right? Or I'll pick it up every once in a while, or, whatever the case may be. Now it's one of the byproducts is folks give themselves now the liberty to say, I've always needed this. Now I'm going to get it. And so you're seeing utilization tick up additionally as a result.
Mm-hmm. That's very interesting. Yeah. So how have the economic conditions such as rising costs of healthcare, et cetera, how has that impacted consumers' attitudes toward Medicare in general?
And we'll get that answer after a brief word from our commercial sponsors.
Nassau is always working harder to be your carrier of choice. We offer insurance products that can help you meet your retirement goals, such as protecting your savings, securing lifetime income, or paying for healthcare costs. We're dedicated to providing best-in-class service and are keeping things simple, and we'll have your back. We have around 400,000 policyholders and contract holders and have been doing this for a long time, 170 years, but we remain humble enough to always try to improve. For more information, visit nfg.com. Nassau Insurance products are issued by Nassau Life and Annuity Company of Hartford, Connecticut, Nassau Life Insurance Company, East Greenbush, New York, or Nassau Life Insurance Company of Kansas, Overland Park, Kansas. Subsidiaries of Nassau Financial Group. Products are not available in all areas. Policyholder counts are for all Nassau companies as of September 30th, 2022, and are subject to change.
Yeah, so it's pushed affordability to the forefront. We have in our Medicare agent study a trended chart that looks at product preferences over the years, going back 10, 15 years, right? Pre-COVID, I would say it was, sort of neck and neck. A lot of consumers would prefer MA. A lot of consumers would prefer MedSup. If you look at our chart, preference for MedSup was actually slightly higher than MA for folks who are aging in, coming into Medicare. COVID changed everything, right? We saw the huge stock market plunge and folks saw their retirement savings dwindle. MA started becoming the preferred product back in 2020 as a result. Inflation exacerbated that, right? So affordability really has been the major theme 22, 23 as inflation really kicked off, right? You asked about inflation. We are seeing a reversal of that a little bit over the last year or two, right? So the gap between MA preference and MedSup is narrowing, primarily because of all the disruption we're seeing in MA space, right? Folks losing their coverage. We're seeing preference for MA not as significantly higher compared to MedSup as we've seen previously, and even some folks opting for just original Medicare just because of all the chaos that they're seeing with MA.
Yeah, and it's interesting as we jump into this time of year, the advertisements that we see on television specifically, I will say, that I always find very intriguing. So what types of benefits and services are seniors prioritizing as they evaluate their Medicare coverage options? And how has that maybe changed?
Well, I think it differs depending on what product type you're leaning towards, right? So like an MA consumer's priorities are different than a Med consumer's priorities. I would say, within the product lanes, right, there hasn't been a huge change over the years. It's depending on what's top of mind for you, it pushes you one way or the other. So for the MA consumer, if you're leaning that direction, it's affordability is top of mind and extra benefits. You're thinking, I want dental included, I want vision included, I want, I'm hearing about all these flex cards and these OTC allowances, right? So for consumers with fixed income, right, in retirement, some of these benefits is virtually, it's like money in your pocket, right? Especially with the explosion of some of these supplemental benefits over the last few years with things like food cards, right, grocery benefits. A MedSup consumer thinks differently. A MedSup consumer says, I want to be able to see any doctor that I want to see. I don't want to be restricted. So the top two on the MedSup side has been pretty consistent in our studies. I want network freedom and I want comprehensive coverage. I don't want to be nickeled and dimed to death every time I get a sneeze, right? Every time I need a prescription or, to visit my doctor. So affordability, convenience, right? Low cost options is the MA consumer. MedSup consumer is freedom with networks and comprehensive coverage.
Let's switch gears a little bit and talk about technology. We know that there's an ongoing evolution of technology in healthcare. How are seniors responding to digital health tools, and what impact is that having on their enrollment decisions?
Yeah, so that's a great question and timely, right? Because our Medicare Digital Tool Study just published a month ago or so. So we have seen a consistent uptick in seniors being more and more comfortable with digital technology. Okay, so we track this every year. We've done this for several years. We look at how comfortable are you with managing your health and wellness online. How comfortable are you with shopping for insurance online, right? How comfortable are you interacting with your insurance company online? All of that has been trending up over the years. In our data, we have not seen digital engagement favoring one product or another. That we're not seeing that, but we are seeing this increase in digital engagement and digital adoption. Of course, a lot of that is driven by the younger consumers, the 65-year-olds, right? All the folks turning 65 now, they've been doing online banking for 10, 15 years. They've been shopping on Amazon, right? They've been doing all of these things in their working years, and they're coming into the Medicare space. And for them, it's not a big deal like it is for the 80, 85-year-olds, right?
Mm-hmm.
Who are still under a different sort of generational way of looking at things. So we're seeing unprecedented amounts or numbers of folks turning 65 every single year, right? It's 11,000 per day, right? It's over 4 million folks turning 65 every single year, right? And these younger seniors, it's a lot. So, if we're still seeing baby boomers coming into the space, right? I tell this to our clients, right? What we're seeing now is sort of the crest of that wave, right?
Okay.
So it used to be 10,000 a day retiring, or more precisely turning 65. Now it's 11,000, so we're 4 million. And these are the folks driving that push towards, I want to do things digitally, right? I'm comfortable. I can shop online. I have no problem with that. That's even better for me. So absolutely.
Yeah. So from your research, what are some key factors that contribute to the satisfaction and retention in both Medicare Advantage, I know separately, MA as you call it, and Medicare supplement markets?
Yeah, that's a good question. One of the metrics that has been sort of perennial question that we look at, it impacts loyalty, right? It impacts a lot of the member experience KPIs, is the question that we asked consumers: how satisfied are you with the help you've gotten from your carrier to understand your benefits and use them? Okay. Seems like a really straightforward question. It has been very, very impactful when you look at things like loyalty and retention, especially on the Medicare Advantage side, right? As you know, if you're in the insurance space, you know what I'm about to say is true, and that is often consumers see their insurance company as adversaries, right? They're trying to make money. I'm trying to get my health care. They're in the business of denying claims, right? There's that adversarial sort of perspective. And when carriers sort of position themselves as partners in healthcare of their members and consumers, and they can respond with, yes, I'm highly satisfied. My carrier has helped me use my benefits, make the most out of my benefits. It sort of flips that script, and it does really impact loyalty, especially on MA. Now, with MedSup, I'm not saying that that's not also impactful, but MedSup is such a much more straightforward product. MA is a lot more complicated. But on the MedSup, I think about our shopping and switching study. We have a switching slide that talks about MedSup switching. I hate to bring it up again. Cost is a major theme here, right? That's going to be a major driver whether someone wants to switch or not. But when you look at that slide, if I were to pull it up, you would see service also prominent there. So folks who've had not so positive service experiences, there are 3 in particular. Let's see if I can recall this off the top of my head. It was, I tried to call in. I couldn't reach a live human being. I called in and it didn't solve my problem. I had to call in a second time or a third time. Or the representative gave me bad information, right? So all 3 of those experiences, if they had one of those, were associated with higher than average switching, right? So average national switch rate for MedSup last time we did this was 9%. 9% of MedSup folks switched. If you had one of those service experiences, it was more like 12%, 13% switching, which is significant, right? Compared to the average. So cost absolutely is one major one, but also poor service did have a contribution to switching.
And really, that sounds so similar to any other, perhaps, product or service that many of us as consumers face, right? We want to get a good value for our dollar. but if we get stuck or we need help, we
Yeah.
do want to reach someone perhaps. I know there's live chat in different mechanisms. What have you seen as it relates to consumer preferences and behaviors in any shift in recent years? Particularly because, again, we're talking about, the growing use of digital tools. I know I just
Mhm.
mentioned live chat.
Mhm.
What does that mean for how plans are being marketed?
Yeah. So that's a good question. And I'll just mention too, just to piggyback on the last thing you said regarding the retention aspect of MedSup. I think it's an even more pronounced issue on the MedSup side because folks who buy it know they're buying what they call the Cadillac. This is the best plan, right? This is, I'm going out of my way to spend more. So they're going to be even more discriminating, right, on the type of service they're receiving, right? It's not a $0 MA plan, for example, where they know they're going to the cheapest. So I think you got a
Exactly.
more affluent consumer base, right? And they're going to be more demanding. But to your last question regarding digital tools and what that's meant for how plans market, yeah, I think more and more plans have tried to capitalize when it comes to digital strategy, right? They know what we've been talking about here, that more and more consumers are moving towards digital and they're trying to compete. On the member side, of course, it's with offering portable technology, right?
Mhm.
Apps where you can go on, look up your plan, look up information, see if you're close to meeting your deductible, see where you can
Mhm.
go to see a doctor, all of that. And when it comes to marketing, just leaning into some of those digital channels that you would think unheard of maybe 10 years ago, right? So, you know, they are advertising on Google. They are picking up Google ads. They are advertising on social media, right? So in our Medicare digital tools study, a half of seniors have Amazon Prime video. They're streaming Amazon Prime, right? Almost a half have Netflix, right? They're on social media. Now, Facebook is the largest, right, among senior population.
Right.
I think it's about a third of seniors are on Facebook, right? But you're seeing this uptick, Instagram, right?
Right.
LinkedIn, X, formerly Twitter, right? TikTok, even smaller
Mhm.
numbers with some of these newer tools, right? And I think some carriers are paying attention to that and thinking through how should we advertise to these folks, and they are, right? Because we asked where did you hear about where did you see Medicare marketing, and we are seeing folks saying, I saw this online, I saw this on Facebook, I saw this on social
Nice.
media, and I think carriers are leaning into that to meet that. They're trying to get eyes in front of their products, right? And if traffic is there, it makes sense to market there.
And that's where all of us, again, I go back to just as consumers, we're online, we're watching videos, we're streaming. Some of us are on Facebook, LinkedIn, Instagram, even TikTok, as you mentioned. And so, digital marketing, and I'm a digital marketer, can be cost effective. So again, we have to meet people where they are. I do still find the TV commercials to be interesting. I'll just use the word interesting. So, Rob, as we kind of end our conversation today, what are some headlines you would like to say to our audience about what they should be thinking about as it relates to the Medicare space, Medicare Advantage, Medicare Supplement?
Yeah, I think we're in a bit of a challenging time for consumers. We've been in this now for a year or so, and we're not out of the woods yet, right? So, a lot of folks got that termination letter last year. I think a lot of folks are going to get it again this year. I think as an industry, we're sort of bracing for another chaotic and disruptive AEP. We're seeing this impacting. I think all actors in the space are being impacted, from consumers to brokers to carriers, right? Carriers are struggling on the financial side. Brokers are being told, sorry, we can't give you commissions any longer, right? We can't
Right.
afford it, right? So it's affecting their livelihood. And consumers are just trying to get health plan to meet their needs and are
Right.
finding there are less health plans at higher cost with worse benefits. So On the positive, right? I would like to end on a positive, right? I don't want to end with a negative. On a positive, this isn't unprecedented, right? A decade ago, we were seeing a lot of disruption as well in the MA space. A lot of folks losing their plans, 2014, 2015. So there's a cyclical nature to the Medicare space, right? Administrations, they come in and they leave. They make different policy decisions, different regulations. Some help, some not so much. I do believe that, in the next year or so, we're going to see us turn the corner here a bit. Thankfully, reimbursement rates are going to improve for 2026. I think I might have mentioned this earlier on the Medicare Advantage side, right, which should help with the financials and the optionality and benefits. It might be a little rough in the short term, but I think like everything else, right, if you look at switching over time, there's ups and there's downs, and we're a little bit on a bit of a valley period, I think, given all that's happening, but over the next 6 to 12 months, I think I see us turning the corner here a bit. And at the end, I think it'll be a better experience for consumers once plans are more stable, carriers are more stable, and the options are there for them to choose from great plans.
Well, I do like getting to the end on a positive note. And so I do appreciate, Rob, your growth mindset and positive, inspirational comment. So before we go, a couple things. One, our final question.
Okay.
You have a very interesting background. You've been in the insurance industry. You were once an agent, of course, and all of that. You could do anything you want to do. Why do you wake up every day and do what you do at Deft?
Yeah, that's an interesting question. Not one I expected. This is a great organization. It's a great firm. I like working with the people that I work with, like-minded individuals. I like helping the folks in the space that are still doing what I used to do, which is how do we serve our clients? How do we serve our customers? What do we need to know? How are trends changing? I've done that for so many years, and now to be in a position to help the industry do that, to be in that support role, is something I enjoy. And I just enjoy to sort of be in this sort of teaching mode, right? I get to share insights, I get to share data, and definitely, something I like to do and have enjoyed doing the last couple of years.
I love that. It's educating and helping and feeling like you're part of the solution and providing data so that carriers, consumers, anyone out there that's looking at your research can make better decisions.
Absolutely.
So if an individual or a company wants to get a hold of you, Rob, what's the best way? We're going to put everything in the show notes.
I appreciate that. So you can visit us at deftresearch.com. You can see more about us, more about what we do. And of course, from the site, if there's any questions or if there's interest in anything, you can always email right from the site. But deftresearch.com is probably the best place to go. That
sounds great. Rob, I know you're very busy, especially this time of year, so thank you for taking time out of your schedule to visit with me today. And we'll be launching this episode very soon. And for our listeners, thank you for listening. Please like us, follow us, tell us what we're doing wrong. We just love to hear from you. And again, thank you, Rob. And we look forward to another episode of the Prime Life podcast next week. Everyone have a great day.
Thanks, Mary. Great talking to you.
Same here, Rob.
Remember to subscribe to the Prime Life podcast anywhere you find podcasts. You can find all of our episodes, contact information, and more on our website, primelifepodcast.com. Stay connected with us. Follow us on LinkedIn, Instagram, Facebook, and TikTok.